So what we're going to talk about is insurable interest. This is a very, very important part of the life insurance application and the life insurance application process. Insurable interest, what it really means is there a reason for this person to get insurance? That's all that they're really looking for. What that means is that the person who owns the policy has to suffer a loss when the insured dies, okay? Obviously, if the policy owner is the person who's getting the policy, right? Then, like if I'm getting a policy on myself, then I'm sustaining a loss. My life is being lost. And my family is losing my income and my what I'm providing for them financially. However, there are some different little scenarios that may pop up with insurable interest, and this is important to know for your life insurance prep exam and your licensing exam. So if there's a company, for instance, I'll give you an example. Say there's a company, right? And a company has a key employee. Say this person is like the CFO of the company, right? If that CFO leaves, that company needs money to replace that CFO. So to hire, recruit, go through a ton of applicants to find the right person, to train them, maybe any revenue that may be lost during the time when they are in that process. So that CFO provides something to the company where if that CFO dies, that company will be at a loss. So in that sense, there's insurable interest on behalf of the company to insure, to get life insurance on the CFO, okay? So another situation can pop up where like if someone, what we sell here is final expense life insurance at my agency. So a lot of times like children get it on their parents. Okay, so if someone is getting a policy on their mom, right? If I got a policy on my mom and I owned the policy, the loss I would suffer if my mom dies is that I would have to pay for her final arrangements and I would have to cover any outstanding debts she has if I want to keep that property. Okay, so the insurable interest on my end is, hey, I'm sustaining a loss if my mom passes away financially, okay? Now, the reason why this is important is because you can't just go get a life insurance policy on someone you don't know if there's not going to be a loss. Like you can't just gamble with someone's life. They call that stranger-owned life insurance. We'll get into that in another video. A Stoli, not the vodka, it's life insurance. So with insurable interest in life insurance, all it's saying, the concept is saying that, hey, if someone is going to get a policy, the person, if someone is being insured, the person who owns the policy must be sustaining a loss. So that's really what insurable interest is. All right, it's an important concept to know, and there may be some questions on the exam that may ask about what insurable interest is, or is there insurable interest in this situation. The beneficiary does not have to show insurable interest. Okay, the beneficiary does not have to show insurable interest. Also, some banks will own a policy on someone who owes them money. If someone gets a huge loan out for, say, a like a several hundred or several thousand unit apartment building, the bank may get a life insurance policy on that person to pay back the loan, or at least a chunk of it, if the person dies. Okay, if the person who has the loan dies. So there's insurable interest there. The bank's saying, hey, if this person dies, we're screwed. We want to make sure we get our money back. So that's another reason why. That's why a lot of local banks actually offer some life insurance, is because they're like, hey, if this person's got a mortgage or some loans with us, we want to make sure that if they die, their family can pay back their debts. So just keep this in mind as you're going through your life insurance career and the life insurance course, that insurable interest means that the policy owner would lose something if the insured dies, or they would take on a debt, or there would be some sort of expense. And insurable interest is part of the underwriting process. So the insurance carrier wants to make sure that there is insurable interest. So they want to make sure, like, hey, is this person getting the policy going to sustain a loss when the insured dies? Now, it can be confusing because a lot of times the person who is owning whose life is being insured owns the policy as well. So just keep in mind that that person is sustaining a loss, their life is being lost, and they want to cover something. There is a financial loss too. Like they want someone to, say the guy makes $100,000 a year, And he's like, hey, I want my family to have my income for the next 20 years, so I'm going to need at least $2 million of life insurance, and that doesn't count into inflation. That's insurable interest. It's saying, hey, this guy dies and his income is being lost. There will be a loss sustained from that person's death. Okay, it's another example of insurable interest right there. I hope this video helps you guys. If you find these valuable, please subscribe to the channel. Throw a like up for me, a comment, and let me know if there's any other way I can help you with it. I'd love to help you guys pass your exam the first time through and help you on your way to a prosperous insurance sales career. I have videos on sales, marketing, but I like to get people started on the licensing course first, because that's the first step, is getting your license. And once you get licensed, we can learn the sales process. We can learn how to sell life insurance. You can learn how to find clients for life insurance, which is one of the biggest challenges. So please stay tuned, and I really, really appreciate the support. Thank you, everybody.